Hi there, traders. This is Brad Goodwin with the FX Market Insight for the 13th of November. All right, as we come out of the US and Canadian holiday for Monday, we've seen a bit of volatility around in the equity markets. The US stocks down over 2%. This is putting a bit of a risk-off appetite in play, and as you'd expect, the Aussie and Kiwi are rolling over, but not quite as much as the Euro and Sterling. Just having a quick look at the US dollar, you can see here a bit of a flight to safety with the US dollar rallying. Once it broke through sort of 97.10 on the index, it does look for all money like it's heading towards at least 98, towards 100, if anything. Now, the other big giant, sleeping giant, the offshore yuan, dollar yuan, US dollar, after that massive intervention by the People's Bank of China, driving it down 13 cents. We're about 150 points off the high it saw just over a week ago. So once again, that sort of intervention, I mean, it's kindergarten stuff, and you'd expect the dollar yuan to be higher, especially when we see some of the Chinese numbers this week. If those tariffs are already impacting them, that's going to weaken a lot quicker. All right, let's just have a look at where those majors are now. With those equity markets in the red, as I said, there's a bit of a risk-off appetite at the moment, but there's some major issues in Europe at the moment, right? So the Italian budget, they're supposed to come back and do something there. There's been a few comments from Minard, who looks after Guggenheim's assets, saying basically, like, this is just a general opinion out there, that there's a 50% chance of the Italians pulling out of the Eurozone and a complete meltdown. So that's going to put a huge amount of pressure. That level of crisis has not been factored in yet. So we've got the Fed, we've got US strong numbers, and now we've got some issues in Europe. You can see here where it broke down through 113, the figure. Okay, a nice technical break. It's sort of just melted down. So now we're sort of just banging away. It's jobbing around in a sort of 30 or 40 point range. It's a bit hard to sort of tell where it's going right now, but you would be looking to sell on rallies. Now, Sterling, this puppy here just doesn't stop. Right, if I just widen this out a touch. We have had one UK minister sort of resign over the weekend, and then there was talk of another 4 walking out. Now, that started everything for me. It pushed Sterling down through 129.60. Now, the level where it sort of stalled last time was around 129.5. So you can see where that's happened there. It's come back, retested that spot, drops down to 128.30, then bounces 100 points, and then drops another 80 or 90. So just be aware, Sterling is all over the shop, and I would expect it to continue since the moves are coming from newspaper articles as such. Now, that the equity markets put in a bit of downward pressure, particularly on the Aussie, right? A bit of a growth story there, 71.78, sort of that horizontal level where it's sort of based on the way back up. And this is where Kiwi topped out as well, around 66.90. The Kiwi, as you notice, isn't going as far as the Aussie. And that's because the fundamental backdrop of the Kiwi is much stronger than the Aussie. Aussie's more of a technical trade at this point, where the Kiwi has got the technicals and fundamentals all pointing up. That's why it's not coming off like the other currencies. Dollar yen, once again, we see a little pop to the top side and just trading sideways. The market's not sure what to do with dollar yen just at the moment. Of course, we've got strong dollar, as you can see the dollar index over here, but that doesn't necessarily mean all the US dollar pairs run to the top side. So the yen being part of a safe haven, it's sort of, no one really knows how to play it. The Swissy, well, it's still moving to the top side, but you can see it feels a bit uncomfortable going above 101. So that may see Euro hold down here and bounce back if the dollar Swiss doesn't start to move. And dollar CAD, okay, the loonie, oil under $59 a barrel now, chopping about. It looked like it was going to be all over the place, and now it's starting to get a clear run to the top side. And, this could easily run another couple of hundred points. Absolutely. All right, so let me just come across and give you a look at the major news here that we're seeing that's driving all this activity. This is what you need to be doing. You need to focus on what is actually the culprit here. Obviously, Brexit is one of the major parts. The other part of it is, as I said, the downside move in equity markets is putting a huge amount of pressure on sort of the whole global growth and giving and underpinning the dollar strength, right? So just keep an eye on that. CAD edges high, oil price rebounds there, I think so. So there's not much in it. Brexit is the main show here, and we get a start today with with some major economic data, right? So when we are looking at the numbers, you want to make sure that you have a very good understanding of what's coming out, because these numbers will impact what's going through the market. Now, if I just get the MyFX Trading Hub up, just having a look down here. Now, the next major event, okay, this is really where trading starts for the week, and it's a heavy-hitting number, the sterling employment numbers. Now, the Bank of England have highlighted the average weekly earnings as being the key number, but you get the unemployment rate, the employment change, and the average weekly earnings. There's three big variables there to consider. And don't forget, we've got random Brexit updates coming along the same way. To me, the best opportunity today will be the German zoo economic sentiment numbers. We've got some final CPI numbers out of Germany as well, but Euro's got very clear direction here, and the German numbers, we get weakness in that, then it's just a lay down misère. If you're a 500 card player, then that's the trade to play for me. So just looking at the major currencies, the outlook, there's been no major change. Euro bearish. Now I know sterling, some have mentioned to me, like, sterling's going down. How come we don't have a bearish? Well, it's like, it's been up and down like this for the last year. So I'm not really jumping into this. UK fundamentals are strong. US fundamentals are strong. They should nullify each other. Brexit is the culprit. Now, with the dollar pairs at the bottom, and I'll come to the Aussie and Kiwi in a sec, they're pretty much all bullish. But if you have a look at the charts, they're bullish, but they're stalling, right? The market is not sure whether this US dollar move holds or not. And it's very common for this to happen. So at this point, dollar yen and dollar Swiss have stalled. And you've got dollar CAD and the dollar index both running to the top side, still looking pretty good at this stage. Now, the two antipodeans, the Aussie, okay, it's been in a bullish sort of technical setup, but that's about to change. If it drops down through 72, the figure, we'll start to see that bullish move flip over, whilst the Kiwi, it's got a lot more room to move. So Aussie's basically, what I'm trying to say, is closer to being bearish. And I think we'll still see the Kiwi maintain that sideways activity. And the best way for me to show you that is on the charts. Okay, if you have a look at the technicals here, just have a look at the daily setup here. You'll see what I'm talking about with these currencies. Now, these are all daily charts. You can see here the euro is sort of broken down through 1 to 13. Sterling, as I mentioned, just a bit of a dog's breakfast. It's still within that massive range, even though it's dipping. Now, here's the Aussie and Kiwi. Aussie's broken high. It's now rolling over on itself, whereas the Kiwi has gone up and it's just off a touch. So the Kiwi looks much stronger than the Aussie does, and the Aussie looks like it's going to get swamped today, I should say. Dollar yen, even though it's sideways, it is sort of slowly moving to the top side. As I said, it's like watching paint dry. And dollar Swiss still banging around 101, that major technical level. If we get euro under 112, we should see dollar Swiss scream to the top side. And as you can see here too, dollar CAD also breaking that longer term chart around 132, and the dollar index up through 97.10. So there are your long-term charts. Now, one other thing, just to have a look before I finish, I just want to give you a look at the raw nerves out there. Now, we're talking about equity markets and these sorts of things. Just have a look at it's always good to see what's going on in the sort of like the commodity equity space. Here's the dollar index, right? You can see on a long-term chart, it's broken above 97, and it has got free reign pretty much to run another 300-400 points to the top side. Gold, well, there's not a lot of nervousness in the market. Gold's dropped off $30 from where it has been recently, but it's got a long way. It's still within a massive range, but that tells me the market's very comfortable with the current moves. Now, crude, if you're looking at oil pricing, we did see that move down through sort of $67. It's now came up to a major level here. Now, if it breaks down through here, well, a drop to the downside is inevitable. Where it stops is anyone's guess, but looks like that's got a long way to go. And the equity markets, if you're looking at the two of the biggest equity markets, the Nikkei and the Dow, well, the Dow's at 25,454, a bit hard to see there. if it drops down through sort of 24,250, well, then that's going to set up the market will get very nervous and set up a major move to the downside. Look at all this sort of congestion over here. So a lot of those punters that do use sort of horizontal lines and these sorts of things, I'd say you'd be lining this up on the downside here and saying, well, if it gets through 23,344, well, it's going to create panic, right? When that creates panic, the US dollar rallies aggressively. So you want to make sure you're keeping an eye on these levels and to keep an eye on these instruments, because that's where the catalyst for the next major US dollar move may come. The Nikkei, also the same sort of thing. Bit of a mirror image of the Dow. Now, copper, for those traders trading the Aussie, it's just drifting lower as well. And this has got a much higher correlation with the Aussie dollar than gold. So just keep an eye on that. It's one of those random metals that is always worth keeping an eye on. So as you can see there, there's a bit of, well, not really fear yet. As I said, if the Dow can break down through, say, 24,000, it's going to get a really hit the headlines, and that should drive the dollar higher. Gold, well, the market doesn't seem too nervous yet. If the market was nervous about this move in the equities and or the dollar, gold would be rallying, but it's not. So it makes the move even more comfortable. And the other big potential, so to me, the big potential here is crude. Keep an eye on this. If it goes down, you're going to expect dollar CAD to rally, right? You've got to understand which of these instruments impacts which currency pair the most. And that's where you're going to get the benefit of understanding these charts. And that's pretty much it, guys. When you bring it back to the major currencies, that's pretty much why they're moving. We now have the major releases to focus on. As I said, I just got the sterling employment numbers and the German zoo numbers. That's pretty much all she wrote today. Then on Wednesday, it really kicks into gear with data released across all time zones, Asia, Europe, and North America. All right, guys, that's it. So you'd expect and with the US holiday on Monday, once the US market opens up on Tuesday, that's when things really kick in. But we've already got the news, the geopolitical news around Brexit already in the market. So that's putting downward pressure on euro and sterling. So now it's time for some data. I don't know if this UK data is going to have much impact with the Brexit news that's currently in. If the data is weak, well, that goes with the current sentiment. That's probably the best opportunity. And definitely weak German numbers would be quite awesome to see that euro get another kick to the downside. But we've got 12 hours to wait. So just relax, enjoy your day, and wait for these opportunities to pop up. Cheerio, guys. Have a good one. See you in the live trade zone.